back. We're kicking off hour 2 with a whopper of a Freaky Friday show. And, it's really hard on Friday to keep it going, keep the energy up. Everybody's looking for the weekend. We're working to the weekend. When you want to fire it up for the final hour of the week in the leadoff spot, you bring in someone who can light it up at all times. Hillary Kramer joins us now. She's an investment advisor. She's a portfolio analyst for more than an investment analyst, portfolio manager for over 30 years. And she's also a host of the national syndicated radio show Millionaire Maker. Thank you so much for joining us today.
It's a pleasure to be here.
Fridays are tough with guests, but boom, we asked Hillary and she's here. I ran into you last week with Pavlina, who's a wonderful contributor. As soon as we met, I said, boom, we have to have Hillary on the show because the perspective you have is so different from mine. And I just did a post the other day on my social media stuff about the difference between bulls and bears, right, which most people don't even understand the whole bear side. But you understand the bull side as good as anyone. What's happening with this market? I know the Schiller report's out there. He's talking about being an emotional sugar high. But what's really happening? What does our audience need to know about their portfolio and what they should do going into 2020?
2020 should be a very good year. There's no way, of course, we can duplicate a 38% increase in the NASDAQ, 26% in the S&P 500. However, what we can do is see high single digits, that's for sure, when it comes to the market, because everything fundamentally is really strong. These rate cuts, at first I felt like it was manufacturing a strong economy, but it beget a real economy that has, everyone working, labor costs are inflating just the right amount. Look at what a great Christmas it was. The reason there was so much retail sold was that people have money for a change. Now, when it comes to 2020, of course, there's going to be rotation. Don't think Microsoft is going to be a double again. Don't think that AMD, Advanced Micro Devices, is going to be up 167% from where it was, or even like medical device companies. Some of them had been languishing for years, like Medtronic, Biomet Zimmer. They had this amazing year after years and years, just sitting around. Expect the banks. I think the banks are going to do very well going into 2020.
Even with the lower interest rate environment, their spreads are getting cut. We often have on Tom Coughlin, who's the CEO of Bayonne Community Bank. He was saying that it gets a little tougher for banks when they start to cut rates a little bit because their spreads, and they take a little less risk because the spread's lower.
Right, that's absolutely right, and that's why everyone did sell off the banks. But when it comes to like the big banks, J.P. Morgan, how about Goldman Sachs, which is, now they have this consumer bank now called Marcus, which I think is going to do them very well, which is just for the everyday person, everyday investor. But what Goldman Sachs has going for them, they're truly an international investment powerhouse. They are phenomenal. Goldman Sachs was really struggling because there was a fraud that two of their partners, $230 stock that is already up about 23% from its low. I think we're going to see Goldman Sachs hit $300. They don't have to compete with Barclays. Europe got annihilated, right? CS, Credit Suisse, UBS, Barclays doesn't even really exist anymore. The French banks are struggling with all the loans that they have made. So a company like Goldman Sachs does everything, not just trading. They're going to do all the mergers across borders. So I love that, and it's very, very true. John's point is that the smaller banks, some of these regional banks, it's not as easy. This net interest margin creates a real problem for them because they don't make as much on the loan. It's almost counterintuitive. But there are banks like First Hawaiian, FHB, with a really sizable dividend yield. That's the only game in town. Everyone in Hawaii goes there over going to the Bank of America's, Wells Fargo players in Hawaii.
So Hillary, let me ask you, yesterday we talked about how the NASDAQ had broken a new record, hit 9,000 for the first time in history, and with the exponential growth of the Dow Jones and the NASDAQ, a lot of people are wondering and worrying that we could be in some sort of a bubble, especially when there's a low interest rate environment like this. From where you're standing, do you think there's a possibility that we could be seeing a stock market bubble that is poised to burst?
There's always a concern that if anything like exogenic happens, let's say North Korea, or there's some massive fraud that we didn't expect, and if that takes place, the problem is, of course, you have all of these traders that are trading just on technology algorithms that they've created. Basically, they program their computers to decide what to buy and what to sell. So there is a chance that if things go wrong somewhere, they'll suddenly start to sell and sell and sell, and everything moves faster. So rather than being down, 9.9%, which is what happened August 2015, we just bounced right back. Yeah, we could really go down because people could get afraid. Big institutions have made a lot of money, and it's more a matter of conserving the profits. So there could be a lot of selling across the board. That is true, but anyone who sold in 2008, 2009 knows they'd be in a lot better position now if they hadn't sold, except for GE.
I happen to feel like I've been talking about for weeks now that 28,000 was the new normal. That was like the new support level in my book. And over the years, my 30 years on Wall Street, I tend to think when stocks break a new whole number on a Friday, and then everybody gets their Sunday paper and reads it, that there's usually a boost after that. And we had a close 2 weeks ago on a Friday above 28,000. I thought a Friday close could burst us with the Santa rally and anything good out of the talks with China to like 30,000. We're just bumping up against 29 right now. And sometimes these markets, everybody says bubble, 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 because they want to make news. They want to be the one who called the bubble. But I happen to think that we could have a melt up right here with lower rates and any good news out of the trade talks. We have, the White House is saying, as you aptly said recently, that a resolution with China could add another 0.5% to the GDP. Mm-hmm. So those type of things, with the earnings we're seeing, the repatriation of cash from overseas, I think we could have much more of a healthy melt up and establish some new normals there.
I am so in agreement. I mean, that is exactly where we are. That's why I say we could be up high single digits. We may even go into the teens. So it is because things are so strong. And if trade talks with China, if we really have a Trump-Xi signing, I think that could add, that could be an incredible day in the market. And I know they say sell on the news, buy on the rumor. However, and this is the part that's so interesting, and I think you'll find this interesting, John, what I can't imagine or could never have imagined years ago happening in the market, like a really strong company, like a 3M reports earnings, and boom, they can be down 15% that day. These are companies that people hold in their portfolios forever. This week, a little more understandable, I saw U.S. Steel. They report, and boom, the stock's down 10%. So these things, you have to be so careful in this market as to buying the right stock and understanding that you can just get killed because it holds no prisoners. They all get executed.
As you know, we talked about it the other night at pretty good length. My background is in short selling, so I tend to find a reason to bet against stocks when I think they're overheated, overvalued. I try to find the ones that I think they're way overpriced and they're going down. And what people don't realize is you can be both, right? Macro, I believe the market is going up, but a high tide rises all boats. So even these companies that are underperforming, they're getting dragged up just in the market, right?
Right. So are you shorting the retailers? Because that's going to be a bloodbath, I think.
I think brick and mortar only have a big problem on their hands.
Like Macy's.
Well, you look, Toys R Us went down, Sears went down. These are companies that were like traditional Americana staples. They can't hold their own anymore. But the stocks may even get dragged up with the rest of the major market, and I try to pot shot those ones because even when the market's up and I'm calling for a bull market macro, that still increases the opportunities for me to pick out single stocks that I think are going down.
Look, shorters to me are the smartest people on all of Wall Street.
Hey.
No. But it's really true.
Thank you.
I am telling you, it's always easy to go with the crowd. It's always easy to go with the herd. But to pick out that stock and you have to be brilliant, tough, resilient, and be willing to be,
wrong.
Yeah. Right. I mean, it's really an amazing thing to be able to short.
Hillary, on your radio show, you spend a lot of time giving people personal financial advice. From what you've observed in your time on the radio and on Wall Street, what's one of the biggest mistakes people tend to make in terms of handling their own personal finances? Any tips you can give folks watching in order to help them avoid some of those financial pitfalls?
Okay, that's a great question. What can you do to defend your portfolio? Do not ever buy too much of one stock. Anything that you think is a sure thing, leave it to the experts, leave it to the shorters to go out there and do what they like to do. But if you're an individual, you never should put more than even 3% into any position. Look, if a stock's going to do great, you will still make money. I have biotechs that I think are going to be doubles. That I'm even putting less than 0.5% into the biotechs. Please never get all concentrated. You think you know, but you don't. The more diversified you are, the better.
Well, thank you very much, Hillary Kramer. You may have noticed there when she said leave it to the expert, she kind of gestured towards me, although I was out of shot. Do not look at me as an expert. I'm not a financial advisor. I did not play one on TV. Do not take any financial advice from me. Check with a professional advisor. Make sure you're educated, aware, it's suitable for you. Was that enough disclaimers for FINRA, even though I'm not a FINRA representative? And plus, every day when we're talking about stocks, we're also drinking alcohol. So don't take a listen to me. Monumental thing going on right now that I just heard. All our social media friends are out there. There are not one but two Vaqueros in the golf simulator, the senior champ and the junior champ right now in Staten Island watching Liquid Lunch. So they're popping up everywhere.
All right.
Our friends, family, fans. We're going to take a quick break and we're going to come back right after this. Thank you very much, Hillary. Appreciate it.